will Russian gold flood the market? Wars are fought at the highest level of technology available and with all of the financial resources available. In a wartime economy, governments ignore deficit spending, inflation, and other financial impediments. They're all secondary to finding the resources to finance the war. Good morning, it's Jeffrey Christian of CPM Group. It's 11 a.m. here in New York on Tuesday, the 15th of October. I want to talk today about, will Russian gold flood the market? I'll talk about this, work through it, and I'll come up with our conclusions at the end, and then I'll also talk about our outlook for gold and silver prices on a short-term basis. So in some quarters of the world, on the market and government, there is a concern that as the Russian economy further deteriorates, and it is deteriorating despite what some American traders and some statistics suggest, as it deteriorates further, and or should Russia lose its war with Ukraine, it may sell some of the 75.1 million ounces of gold it has in its monetary reserves. That's 75.1 as of the end of August. I'll show you a chart in a little bit. It's been fluctuating because Russian government has been using its gold reserves, selling gold from time to time, and buying gold from time to time on a month-to-month basis since it attacked Ukraine and invaded Ukraine in 2022 and faced having most of its foreign exchange reserves frozen and a variety of sanctions limiting its access to capital and debt on a global basis. The Russian government has additional gold holdings, but these seem to be largely held by the Russian military, and they're not considered to be accessible to the Russian government. There have been times when it seemed like the Russian government wanted to access some of that gold, and the Russian military basically said, no, this is ours and it's for our use should we need to use it to support the military in an absence of government financing. So it looks like that gold is not really available for the government to access to finance either its war effort or the general economy. And the Russian military appears to have been unwilling to use these reserves, even though they're their own resources, to finance the war in Ukraine. It's also seems likely that some of that gold that the Russian military has been transferred not to the Russian government, but to Russian and government leaders over the last 24 years, because those Russian leaders wanted some for their own. It also looks likely that some Russian military leaders also accessed some of these gold reserves. So we had estimates as to how much gold the Russian military had in a post-Soviet era of the early 1990s, and we had various indications that supported our estimates, but it looks very clear to us that since the early 1990s, over the past 30 years, there has been gold that has been, let's say, accessed from the military inventories, taken on by either military officials or government leaders for their own personal accounts. Now, our view is probably Russia will not flood the gold market with gold in either of those circumstances. And I'll tell you more. I'll enumerate the reasons why that's our view at the end of this video after I've gone through some things. So if I say that, you might think that this is a straw man argument or raising something, people are worried that the Russians might wind up having to sell a lot of their gold and flood the market, and that could be depressive of prices, and that we're raising this just to say, no, we don't expect it's true. that's not the case. We bring it up because some people are starting to speak and write about it in public or aloud as being a real possibility. And thus it's a topic that really warrants consideration and discussion regarding the likelihood and probability of this happening. Our view, sorry for the typo, is that such large-scale sales are unlikely, but commentary by gold promoters and gold bugs in the West could have short-term negative effects on gold prices in the near future, the next year or two. Now, in order to do it, let's talk about the Russian government's financial situation, and let's talk about the Russian government's gold reserves. The Russian economy is showing some strength, as I said, but the statistics that people look at are faulty indicators. So Russia's trade balance has looked very good over the last few years, but that's because there's been a sharp drop of imports due to sanctions. And the Russian government, you can see this table, relatively small, and I'm going to put my glasses on so I can speak more accurately about it. In the first 9 months of this year, they had a current account balance of $50 billion. It's pretty good. And a trade balance of $102 billion. Again, that $102 billion, which is higher than it was $90 billion a year ago, same period, reflects the fact they're still selling gold, oil and natural gas, as well as aluminum and nickel and platinum and palladium and rhodium and other assets that they have. They're still selling exports. But the imports have been constricted due to sanctions and due to having their foreign exchange frozen. About $300 billion of the foreign exchange has been frozen since they invaded Ukraine. And a lot of lending and borrowing has been not allowed, so that even the Chinese government will not lend money to the Russian government at this point. And in fact, did give it some money, but it did it by buying a piece of land up by the North Korean border on a river where the three countries come together. And the Chinese basically bought some land back, the land that probably was stolen from them during a Russian war during the Tsarist era in the 19th century, in order to have access to that river's, the mouth of that river. So Russia's balance of payments overall is not that good. And there are a lot of economists who look at it and say, these guys have maybe a year more of this wartime economy before they really start hitting a wall. And the Russian government has actually said as much as well. So now let's turn, how much gold does the Russian central bank actually have? At the end of August, it was 75 million ounces. You can see it's fluctuated basically between 74 and 75, with a couple spikes higher, since the war began. 75 million ounces of gold is worth about $200 billion at today's price, which was $2,668 when I was producing the slide this morning. It's $2,674 now. So, roughly $200 billion worth of gold reserves compared to maybe $40 billion of foreign exchange reserves. And, as I said, 300 billion or so were frozen at the beginning of the Russian invasion of Ukraine. And the Western governments, including the United States, have declared that they will use some of those frozen assets to recompense Ukraine for what will ultimately be a reconstruction, assuming that Ukraine remains an independent country and that Russia doesn't completely take it over as a result of this war. So they have about 75 million ounces of gold, and it's worth about 200 billion. That's 5 times what they have in foreign exchange reserves. So if they really needed to, they could. And you can see the fluctuations here. the Russian government has been buying and selling gold from its monetary reserves. It's been selling it gold to finance the government's operations as well as the war effort. And in those months, these are monthly purchases and sales, or additions and withdrawals, changes in the monetary reserves. It's usually between 500,000 ounces and 1,000,000 ounces. There have been, I think, 4 months where they sold more than 1,000,000 ounces, but less than 2,000,000 ounces. So they are using this, but that month-to-month buying and selling is not what people have been expressing concern about. The concern is a larger, more wholesale sales of gold at a time of greater domestic Russian stress, which could happen depending on the outcome of the war and the domestic consequences of the war, both as it has been executed and as it will be executed going forward. Now, Anders Östlund is a very smart man. He's a Swiss economist. He was an advisor to the Russian government, at least in the 1990s. I don't know that he's been much of an advisor to the Russian government since that time. Extremely knowledgeable about the Russian economy as well as the Ukrainian economy. And he did an interview, about 33-minute interview, with Times Radio, which is part of the Rupert Murdoch media empire, News Corporation. News UK is the UK subsidiary. He did a 33-minute discussion primarily about Russia as it relates to the war and going forward and its economic environment. It's on YouTube. It's worth watching. He's also written his book, Ukraine, What Went Wrong and How to Fix It. Very astute fellow, very impartial. So you don't get the demagogic bias that you get some places. Here are some of his key points and some of CPM Group points. First off, he's pointing out correctly that Russia is running low on foreign exchange reserves relative to its trade balance. The Russian economy and the central bank and others within Russia have said as much. They probably can continue on their war footing, their wartime economy, for another year or so before it really gets tight. They've publicly stated that they're leaning towards suing for peace in late 2025, depending on what happens in the U.S. election. And then I point out also, they do have the capacity to sell gold. Putin doesn't want to sell that gold, but in a real crisis, they could be forced to. We don't think that's probable, but it's something that's hanging over the market. Russia cannot win the war if the West keeps supporting Ukraine, and Östlund says, and it's true. Russia is hoping that Trump wins because it assumes that he'll pull funding and U.S. support from the Ukraine, allowing Russia to win. So Russia's really hanging on for the election to see how it shapes up. And that's really the key, which I'll talk a little bit about more. So we would note that NATO has said that it has taken steps to be able to provide funding for the Ukraine war effort, even if Trump becomes president and halts U.S. support. They used the term, they have Trump-proofed Ukrainian funding and support. So we kind of know where it all stands. The key participants, the Russian government, Ukraine, the U.S. government, and NATO. And the outcome of the war really hinges on the outcome of the U.S. election. If Harris wins, there could probably be, most probable scenario is that if Harris wins, there's an acceleration of the U.S. willingness to support Ukraine and to allow Ukraine to have the offensive capabilities to bring the war to an end, to the point where Russia sues for peace. If Trump wins, there's every indication, and he said so as much, that he would pull support from Ukraine. He has a personal distaste for Ukraine and the Ukraine government, even though the Ukraine government that he had a problem with in the past is long gone, although his animosity to the Ukraine government did extend into the Zelensky government now. If Trump wins, the likelihood is that he would pull support. Russia would feel rejuvenated in its capacity to prosecute the war in Ukraine. NATO is prepared to take steps even in the absence of a U.S. government support. So it'd be much more difficult. Russia would be more likely to hold on if Trump wins the presidency, and control of the House and Senate are very key to that. It's not just the presidential election that's key, it's the presidential and congressional elections. But that it all comes down at the end of the day to the U.S. election. So, will Russian gold flood the market? Wars are fought at the highest level of technology available and with all of the financial resources available. In a wartime economy, governments ignore deficit spending, inflation, and other financial impediments. They're all secondary to finding the resources to finance the war effort. Yeah, wars are do-all, or you win or you lose, and it's the way it is. This implies there's a real risk that if Russia did get its back up against the wall, it could accelerate its gold sales to generate cash to buy more armaments. You have to understand, there were 3 large caches of North Korean ammunition that Russia had bought from North Korea that were destroyed by Ukrainian forces over the last 2 months. So they need armaments, they need money to buy armaments. Iran, China, North Korea, none of these guys are giving Russia military support. They're selling them military support. So there is a real risk that Russia could sell its gold, because at the end of the day, a war is a matter of continuing to exist or not existing as a government. And again, I think I mentioned this a couple of weeks ago. Tsarist Russia collapsed during World War I. The Soviet government collapsed primarily because of the Soviet invasion of Afghanistan, which dragged on from 1979 to 1988, 89. And had severe economic, social, political consequences within the Soviet Union. So Russians have a keen awareness that failed wars often lead to a change of government. So back up against the wall, they could sell their gold. Our view is that only happens in extreme circumstances, for at least 3 reasons. First off, it's the resource of last resort in the government's view, and in most governments' views. Gold is the stuff you hang on to as long as you can. Second thing is the gold probably could be seen as insufficient in value. It's $200 billion. That's a lot of foreign exchange that could be earned. Although if you try to sell 75 million ounces of gold, you probably aren't going to get $2,675 an ounce for it. And the third thing is that Putin will hold on to it because for him, gold is a talisman. And as long as he's the president and as long as he's in power and rules the country, whether or not he's president, he will not really want to see those gold sales go over that 2 million ounce threshold. So we don't think it's necessarily likely, but it is something to pay attention to because in extreme circumstances, you could see a large amount of Russian central bank gold coming into the market. And hitting the price. Now, it might not come directly into the market. It might be sold to the Chinese central bank or the Indian central bank or some other central bank that is friendly with Russia. But insofar as it does that, what it would in essence be doing is displacing gold purchases that these central banks otherwise might make in the market. So even if they do an off-market transaction with a friendly government, central bank to central bank, it could have the effect of reducing the price of gold, at least on a short-term basis, although probably not as much as if they wound up selling it to someone who would turn around and dispose of it in the market. That's the view there. Talk a little bit about gold and silver right now. Prices have been bouncing around since our last video last Friday. They continue to bounce around. Gold is trading between, say, 2,600 and 2,690. It's, gone over to $2,700. It's treading water. It's staying high. There's a tremendous amount of financial, economic, and political uncertainty. Much of it focused on the U.S. election, which is now, I guess, 21 days from today. And that's keeping the gold price high. And it will keep the gold price high at least until Election Day. And depending on the outcome of the election and what happens in the aftermath of the election, it could send gold prices higher. So that's our short-term view of gold. And silver, very similar. Silver, I think, is $31.42 as I speak. It has broken above $30 over the course of September, and it has stayed above it for the last 3 or 4 weeks. The potential for it to fall below $30 exists, but the potential for it to go back up and test that 33 is there as well. Right now, we're seeing support just above $30, and we're seeing resistance just above $32. That's what we have right now. You can go to our website, buy some of our research, read some free research and videos. You can send an email to info@cpmgroup.com if you want to talk to us about ways that we can help you improve the management of your precious metals and commodities exposure.